As quickly as things move on the 89 tick chart, I really can't focus on dialogue while I'm trading. I have to put all my attention on the chart. So, excuse me. So, hence no audio. The first good bit of this video here. So I'll go back and explain a couple of things. Looks like we're kind of stuck in a little bit of a range here, and it's going to be a little bit before anything sets up. And besides, on the 89 tick chart, from New York Open until about noon Central Eastern Time in the U.S., there's dozens of setups literally on most days. So I'm not really missing out on anything. But just to recap here, so we had two entries. The first one was a second entry. And as you could see from my trade manager, I have it set up for to close out at 6 points, which I did get on this one. Got exactly 6 points out of this one. Um, and as I put over here, your best bet for learning second entries, I can teach them. They're really simple to learn. It just takes a while, a lot of chart watching to get really good at spotting them. But this guy here, V Wilson Analytics, phenomenal. Now, I haven't watched any of his videos in a couple of weeks, but up until a few weeks ago anyway, he did not do audio either. But again, he does a great job of typing things out on the chart where you can kind of follow what he's doing there and understand not only second entries, but two-legged pullbacks. And both of those are methods that Al Brooks teaches. And I encourage you not to look up Al Brooks. Very hard to follow, in my opinion. Super smart, great trader, it seems. But he can find a reason to scalp almost any bar on the chart. And so you really have to kind of whittle down what it is you want to take from his presentations. And for me, that was second entries and two-legged pullbacks. And through that is how I found this guy here. And there's been I've probably been studying two-legged pullbacks and second entries for about a year and a half now, and there are others that I've come across. But this guy here, if you don't know if you're not familiar with it, to me, he's the best teacher I found, even though there's no audio. So here, spread or lag or something got me. I did have a 6 point target set, but closed out at 4 points. So two trades, about 160 bucks. And these all took place. Both of these took place within, let's see, broker time 16:45 to 16:53. So 8 minutes, and that's not a bad day at all. So the elephant in the room, obviously, is this right here. And this is why you never take anybody's word for it. When you're learning some kind of method or system, you go back and you test it for yourself. I was very skeptical when I first started following second entries and trying to learn that. I questioned whether I should put the time into it, but for whatever reason, I did, and you know, learned a couple of things. Your frequency has to be pretty high, so when you sit down to trade, you need to be able to focus on executing what price gives you as often as it gives it to you, because you are going to have an occasional loss at uh, at 20 points, and that's incredibly painful. But my success rate with this method is I would say average 85. I have weeks where I'm low 80s, and I have weeks like, actually, the last couple of weeks I was at about 92%. So, you can do the math, on 10 trades, 100 trades, whatever. Over the last 2 weeks, I had about 45 trades at a 92% success rate. Uh, do the math again. It works out for you. So, for me, I stop typically after two losses in a day. A lot of times, if my first trade is a loss, I'll stop. But usually, I'll stop at two trades and won't look for any more entries that day and come back the next day. And that always seems to work out for me. So there's that. You may try different, Al Brooks teaches 4 points, and I believe this Wilson guy, if I remember correctly, he scalps for 4 points as well. 6 points has worked for me, and it's worked out regarding our risk to reward ratio. Now, the other thing too that Al teaches is that you typically want to stay around an 8 to 10 point, or I'm sorry, 8 to 12 point stop loss. But I just couldn't find success with that. Now, part of that might be on me because I'm trading an 89 tick chart. Most people that trade second entries that I've seen either trade it on the 5 minute chart or a 200 tick chart. And right or wrong, for me, I don't have the patience to sit around and watch 5 minute charts or 5 minute bars form. So, over the last couple of years, I've learned, I've just stuck with the 89 tick chart, and, again, it's working for me. So, let's get rid of this. So, let's see, what else do we need to cover here regarding the chart? Let's see. One thing is, if you're not good with price action, it's much easier to learn on a quick chart like the 89 tick. Price action is price action. Obviously, a morning star pattern or an engulfing bar or whatever doesn't carry the same weight on this chart that it does on a 4 hour chart. Doesn't mean quite as much, but it's all relative, right? So to the time frame that you're trading, if I have an engulfing bar or a morning or evening star or whatever, relative to what I'm trading and the fact that I'm only looking to grab 6 points, you know, um, it works. Having said that, I don't typically use those patterns. There's two methods that I trade, three methods that I trade here. As we've already talked about, the second entries like you see here. And just real quickly, all that is we had a low, and then we came up and we had a new high right here. We had the first attempt right here when we broke this high. Price on this bar broke above the high of this bar, so that was your first attempt long. And then price came back down, and then right here when this bar broke the top of or the high of this bar, that's your second entry. So first entry, pullback, second entry, and right here one tick above, in a perfect world, one tick above the high of this bar is where you enter and scalp out. For me, that's 6 points. Again, for a lot of people, it's 4 points. So that's your second entry, as crudely as I can explain it. The other method that I use, and you'd have to go back in the video to see all the other confluence that we had here. If I remember right, I had a support resistance area drawn here off of this high right here that came across. We already had, I had the Fibonacci here. So we were at this, around the 61.8 to 78.6 known reversal points. We had the 21 EMA, which is part of the AL's teachings, the second entries and two-legged pullbacks, which is why that's on the chart. So we had, two or three good confluencing factors there. And then as price, barreled down into this area, I just took a market entry, and I look for the best possible location. Sometimes I miss them. Again, sometimes lag gets me, and I might enter down here, and I don't get an entry till up here, which again can be kind of painful regarding the very tight stop loss. And on the Dow, which is the only thing I trade, very volatile, especially on a very low time frame or very low volume chart like I trade, and also during this time frame when New York is open. So as you can see, it looks like we're starting to get a reversal here. I had typed on the chart earlier. Another piece to this that will help you is to learn how to read market structure. So we had a low here, and then when we broke this little area of structure here with some very strong closes up here, that signified that we might be reversing into a bullish trend from where we had been in a downtrend. And sure enough, we did. We had a pullback, and then we made another new high. So there's your second structure high. Here's your third structure high. This is possibly a fourth. It's hard to tell without seeing the wicks because you are looking for the bodies, not the wicks. So yeah, we did have a close above the high here. So there's number four, and you can get in. You can start. You can read all these as well. They all get you to the same place, but you're kind of getting in the weeds there a little bit. So four, and then for sure we had five here. So typically you'll see on any time frame chart that you're going to get 3 to 5 pushes in one direction before the market's going to reverse. Now, is that set in stone? Absolutely not. We could have a rebound here, a pullback, and we could see a sixth move to the upside. It's just it's a guideline. And as you, again, using an 89 tick chart, you learn to read this stuff and recognize it really quick because you're not waiting an hour for a bar to form or 4 hours or even 30 minutes. And structure is structure, price action is price action. So this trading on an 89 tick chart really helps you learn price action and structure much more quickly than you might otherwise. Uh, so let's see, what else do we have here? So the red lines are big round numbers. I put these on the chart myself. There are indicators that will do this for you, but we all know if you've been using MT4 for any amount of time, you understand how inefficient it is when it comes to managing memory. So the tick chart indicator, I have to have 2 charts open to run that. Um, and when you throw any big round number or institutional level indicator I've added is just too much. I'm on an i7 laptop, fairly beefy for a laptop, and it's still, it lags too much, and I have trouble with entries and all that. So I just draw on myself and take that problem away. There's no difference between these, whatever, I guess, seafoam green maybe, um, lines and then the lighter colored lines. It's just I selected the wrong color or whatever. But all these colors that aren't red, horizontal lines, are just areas that I have identified as areas of support and resistance. And what I'm looking for there is at least 2 touches, but in a perfect world, 3 touches. And I draw these as perfect as I can when I put them on the chart. But as you'll see, they're more dynamic, I guess, than they are static. You can see we obviously respected this line here and here and here, but price did break above it, right? So at whatever point in the past I drew this line, I did have 2 to 3, good, touches with immediate rejections. But over time, depending on who you believe, they become weaker and weaker, or whatever the case may be. So, but nonetheless, we did see nice rejections here. So, I typically start clean on Sunday or Monday. I'll wipe the whole chart out, and I'll start putting, except for my big round numbers, and I'll start drawing new levels of support and resistance. But sometimes I'll go a few weeks because, again, you'll find some of these I believe I have this set to go back a week. So if we go all the way back, let's just do that real quick. I believe I have a week's worth of data here. So yeah, and the first page never reads very well. So let's go over one. So yeah, June 7th, and we're the 15th now. So about a week's worth of data. So a lot of these were drawn, obviously back during this time, and some of them you'll find they're valid, even 7 days later sometimes. So let's lock that back. The other thing I'll do too is sometimes there's just not enough price action for me to find any good recent levels. So I'll go basically 4 times this time frame. I'll go to a 400 tick chart and and then kind of look for levels to draw there, as this is going to go back and give me more history. And I'll even go out to 1,000 sometimes to look for levels. So let's go back to 89. Why did I choose 89? Fibonacci number, really no specific reason. Um, that's just what I've worked with over the years. That's what I'm used to. So again, that's what I trade. I'm comfortable with the speed. And the only time I avoid trading. I do wait typically, as you probably noticed today. I let the market open 15 minutes, and then once it settles, about 9:45 Eastern time is when I typically start looking. I'll look for trades before that, but I typically don't take them. And if I do, it's usually just a test. I might do a very like a micro lot or something, just as a test. But I found over the years that I get smacked around pretty good if I get in when the volatility is super crazy the first 10 to 15 minutes of market open. So, all right. So let's see. So the 21 EMA, we talked about that. Close, set to close price. This is not going to show up when I bring up my indicators, but I can tell you what they are. So here, just a simple moving average indicator that tells me without having all the lines on my chart how the EMA 5 compares to the EMA 21 on all of these time frames. So I can see that on the minute 5 through hour 1 that price is bullish, at least over the last 5 bars. The price has been bullish on these 3 time frames. So that just kind of, again, that's another kind of confluencing factor in entering these trades. I will go bullish if I only have 2 that are green, and you of course flip this for bearish trades. Usually, like if these 2 are red, I'm not going to go long if I only have the minute 5 in a bullish trend. I'm not going to go long. I'm going to wait to get more confluence here on the higher time frames, or I'm going to wait until minute 5 turns red, and then I'll be looking for shorts. But this is most of these you can find on the internet, probably Forex Factory. I really don't remember. This specific one here is called MTF, MA multi-pair dashboard. That's exactly how it's worded. So multi-time frame, moving average, multi-pair dashboard. There's one called Parviz, Parviz, Trend Fib, and that would be this one. Well, I can't show you right now, but basically it turns your trend line when you use the trend tool and draw a trend line. It turns it into a Fibonacci tool. And as you notice, you can click one time and turn the fib lines on and off, so you can kind of declutter your chart really easy and turn it back on quickly when you want to. And then the other thing I like about it is it gives you the option, as you saw me do, to measure one-to-one moves. And a lot of times that gives you a good profit target. 90% of my trades are scalps, though. If I look left and structure looks good to me, I have a clear open shot to the north on a long trade. Sometimes I will reduce my risk and set a longer profit target based on structure. That might be 20, 30, 40 points sometimes. And those really help offset. I don't take those trades often, but they do help when you have a couple of those those losses on the scalps. Rectangle Reader is the name of the another one that I use, and you'll notice when I draw a rectangle, it automatically moves it all the way out to the right for me, and as price progresses, that rectangle will continue going out to the right, so I don't have to drag it and readjust it and all that. What else do we have? And then that's it, other than Omnia Remote, which is what you see down here, and that's just the tick chart indicator. So, and this one is paid. I highly recommend it, though. The website is ovo.cz as in zebra, Charlie Zebra, if I remember correctly. But if you just Google search OVO tick chart, it should come up. And I don't remember what I paid for it all these years ago. I think it was around 60 or 70 bucks. He gives a 2-week free trial, a full functionality. And again, I can say with great conviction that this changed my trajectory regarding my ability to trade, because I don't know that I would have stuck with it long enough to learn if I was watching 1 hour and 4 hour bars for them and coming back to the chart once a day. People trade successfully like that, and I'm sure I could do it as well, but I have no need to at this point. For 2 years now, I've been successfully doing this with 89 tick charts. So if you want to learn price action structure, again, I recommend this highly, purchasing that indicator. So that's all the indicators. Then you'll see we have trend channels. So if you open up the, how I draw these is with the MT4's Fibonacci channel tool. And again, it's not going to show up when I open it, but I don't believe it is anyway. But what you want to do is you want to change your levels, and I'll try to fix my screen recorder where we'll actually show this particular, the indicator boxes in a future video. But you want the only levels you want are one. You want a second level set at 0.618 and a third level. Um, I'm sorry, I actually have four levels here. I don't think you need all these. I have them. I have the colors changed on them. I have 1.618 and 2.618. So those are the four levels. And then regarding colors, I have it set on the under the common tab. I have it set to gold, and that is. And then you have it under parameters. Check the box for Ray, and that should be everything for that one. So basically, what happens is when you draw. When you click and drag to draw it, it's going to put two lines on your chart, and then you just double click it. You adjust your, in an uptrend, you adjust your bottom. This is, as you see here, this is going on the bottom of price. Then this goes above price, and you just drag that and adjust it. Once you're done, you just double click, and then it kind of freezes it. So the general rule is the first two swings of after New York Open are what you want to trade, which would have been let's see, 16, so right around in here. So it would have been started somewhere in here, and right, so it would have been a channel right here. And as you can see, without me drawing it, it would have been fairly accurate. Looks like, but as you can see, I started down here well before New York Open. Again, that's just a guideline. You have to do what works for you. And there's plenty of YouTube videos on how to draw trend channels, and just like anything else, everybody has an opinion, right? Who knows who's 100% right? But the general theory that I subscribe to is obviously you're anchoring these. Your first and your second anchor point are going to be on major swings. And as you saw when I was drawing this, I was just looking for some kind of fit that made sense. Now this one here has not validated yet. For me, you have to have three touches. I have one, two. I still don't have a third yet, and maybe at some point we'll get a third and a rejection. So if we get a pullback to here and a good rejection off of this channel, then this becomes a valid channel for me. Until that time, these are just lines on the chart. They don't really mean a whole lot. If we zoom in to this one, the second one that I drew, so we have an anchor here, and then my second anchor was right here. And as you can see, we had a third rejection here. So at this point, to me, this became a valid trend channel. And then we rejected it again here, and then we bearish momentum started coming in a little bit, and we broke out. Now again, this is just a theory I subscribe to. It doesn't always play out. Nothing in trading does. But once you have a good breakout to the downside on a bullish channel, and price re-enters the channel to the upside, there's a very high probability that it's going to go all the way back to the top of that channel. So I'm not suggesting that when that happens, when we re-enter right here, that we just go ahead and enter a trade blindly and just let it ride all the way to the top, because again, it doesn't always happen. But as you can see, we did have a good healthy move back up to the top, and time will tell us again, if we're gonna. So far, we're not in a bearish. We're not in a downtrend again yet. For me, we would have to break down below these lows here and close pretty strongly, and then get a pullback and another break of whatever level this price move here ends up making. So to me, we're still on the 89 tick chart. We're still officially in a bullish market. But as we know, the overall market right now is in a very strong downtrend. And probably will continue to be that way for quite some time. So, but the great thing about the 89 tick chart is, if you look, let's just go, where are we right here? 1737. So from right here where price is now, let's go to 1637. All of this from this vertical line to the right makes up a 1 hour bar on the 1 hour chart. So everything from there to here is a 1 hour bar basically. So, there's a ton of opportunities to trade bullish even when the overall market is in a downtrend. Again, as long as you're using those confluencing factors. And, again, I'm scalping, and I would look for longer trades as well if structure gives them to me, and I recognize that before I enter the trade. So let's see. Um, regarding regarding the support and resistance areas. So again, you saw how I was drawing them, and I'm just looking, for the last, when I'm looking for bullish trades, what was one of the last strong bullish moves up that I had, and then I'm just using the wicks for that area, and then I just kind of draw that across. It extends out because of the rectangle reader. And again, of course, this is hindsight, so who can't figure this out in hindsight, right? But you see that we had if I had enough going on here from a confluencing perspective, um, from a confluence perspective, I easily could have scalped 6 points out of this and had another 80 to 90 bucks. But without drawing everything out, I don't know that I had a good reason to enter right there. Um, so let's get rid of that. I think that's about everything. So I will, as I can. I do work a full time job as well, so I don't have a huge opportunity to trade every day, and sometimes only trade for a couple of hours. When I'm fortunate, I can trade, you know, the entire New York Open up until about noon, but it doesn't always work out for me like that. So feel free to leave comments with any questions. I hope you found this helpful. And again, price action and structure are all relative. I mean, it's no matter what chart you're on, what time frame, it's all relative to that time frame. I suspect there's no reason that you couldn't use this method with larger targets, say on a 4 hour chart or a 1 hour chart, but I've not tested that. Again, I only ever trade scalps for the most part on the 89 tick chart. So thanks. God bless. Leave any questions you might have in the comments.